the outlook, the global economy and the pandemic's profound impact on retail and the REIT market in Hong Kong?
Well, I think the retail market is gradually gaining composure. No doubt the pandemic situation is affecting spending, but community spending has turned out to be very resilient thanks to Hong Kong people's high savings rate and also a rather successful consumption voucher scheme offered by the Hong Kong government. So I think they have probably obtained a rather firm footing in terms of retail spending. It's probably the office market that remain rather challenging in view of the work from home option as well as the substantial new supply and high vacancy rates.
With holiday season approaching and COVID restrictions set to loosen, we hope, in Hong Kong, though mainland China, of course, remains closed, Keith, what does the outlook hold then for the final quarter and into 2023, in your opinion?
Well, at the time we talked, Hong Kong's cases have again surged to over 10,000 per day, but it's quite clear that the Hong Kong government is monitoring it, but also trying to maintain social restrictions intact, unchanged. So we probably have been more accustomed to the current situation. And I believe that if you look at the third quarter numbers of retail sales, we are stabilizing. Having said that, I think it takes time for a full recovery in terms of tourist arrivals and spending.
Keith, this is Emily joining the conversation. If we can just dig down a little bit more in terms of your occupancy rate. For office, that was 94.8. For retail, it's 94.5. On the retail side, it was down by 2 percentage points. We're dealing with a Hong Kong recession here. All the while, we have the Federal Reserve raising interest rates. So can you give us a little bit of a better picture or what you're feeling on the ground in terms of what's happening in the retail space?
Yeah, on retail space, I think it's probably not too much correlated with the rising interest rate. It's more of a sentiment to spend and the job opportunities, the disposable income, etc. I think our 94.5% occupancy rate is very decent. It's probably the Shengshui Center, which is located next to Lo Wu, with the border from China. That's been affecting because of the lack of tourist arrival activities. On our typical community shopping mall, like in Chung Kwan O, I think they're doing well, and it's very defensive. And it's very in line with the theme that we've been very much anchored on the foundation of defensive exposure to commercial spaces. I think the rising interest rates have a bigger impact on office market, as no doubt the cost of operating is rising, and multinationals remain a little cautious as to when to expand. So I think that explains the 94% occupancy rate. However, I think the Grade B space, the office space in Hong Kong, was quite strong because those semi-retail trade like beauty, education, the accountants and lawyers, they've been opening office, not in a big way, but reasonably, prudently expanding. So I think that also helped the Grade B office market.